Happy Friday. Brian Manning here with the weekly update. Let's get right to it. So, one thing I really want to talk about today was just how crazy it is and how irrational investors are and what this is doing to the financial markets. I'll give you an example. Monday of this week, the Dow Jones was set to open, and looking at the futures, down around 400 points. All right, then you have the president that says, hey, China called me twice to talk about tariffs and renegotiating. And at that point in time, investors went crazy, and the Dow futures went from opening negative 400 to actually opening positive 200. It's just insane to see what kind of volatility is floating around out there in the marketplace based off of tariffs and hearsay. Because what's really crazier is that the next day, China came out and said, we never called you once. We have no idea what you're talking about. So certainly a lot of movement in the markets, a lot of movement in the financial markets, and a lot of it from just crazy stuff like this. Second item I want to talk about this week is just inflation. Today we get what's called the PCE, that's the personal consumption expenditure. I've talked about this in the past. I really like to look at the CPI, which is the consumer price index. So the CPI measures inflation as well for us as consumers, but the CPI takes into account out-of-pocket medical expenses and housing costs, all right? The Federal Reserve's favorite gauge of inflation is the report that we got today, the PCE, the personal consumption expenditure. But that report, the PCE, does not take into account out-of-pocket medical expenses and out-of-pocket housing expenses. So we don't really think it's the most accurate because we probably know everyone that's paying living expenses and healthcare expenses, and we certainly see those increasing. So to not calculate that into an inflationary read doesn't really make sense, but the PCE is what the Federal Reserve looks at. So for the month of July, we have the headline number, we have the core rate. So the headline number on the month of July on a month-over-month basis stayed at inflation at 1.4%. So certainly well below the Federal Reserve's 2% target. The second item we look at is what's called the core rate. So the core rate also looks at inflation, but it strips out the volatilities of food and energy, right? So it makes it a little bit more stable. So the core rate also remained on a month-over-month basis, looking at the month of July, at 1.6% as well. So headline and core rate well within the Federal Reserve's maximum limit they don't want to exceed, which is 2%. So we'll have to wait and see what happens with the Fed rate cut, but certainly the Federal Reserve is watching inflation closely. Looking at mortgage rates, it's really amazing. Right now, on a year-over-year basis, so this year compared to where we were last year, mortgage rates are almost 1% lower. They're really right around 80 basis points lower, so that's just a hair under 1%. So really good to see mortgage rates go down, certainly helping the home buying market, also helping the refinance market as well. I'll be around all weekend. I know it's a holiday weekend. I hope you all have something fun planned to get to enjoy your Monday off as well. But I will be around and I'll be available. If you have any mortgage questions, any clients need to get pre-approved, just call me on my cell phone or text me. That's really the best way to get a hold of me over the weekend, and I would really love to help you and be part of your business. I hope you have a wonderful holiday weekend, and I look forward to talking with you soon.